Good evening, everyone. Time for another silver update. We are still trending down, kind of flatlining here around 39, and drawn some lines further out on the chart to mark the 10, 20, 30, 40, 50, and 60% correction points. So we'll look at those in a minute. I just wanted to point out some volume figures here that we're seeing, and we've seen some amazing volume. Point out these two spikes here. We've actually got, you see these two spikes at about 50,000? And that's 50,000 contracts, so just get an idea of what kind of volume we're talking about here. That's 50,000 contracts at 5,000 ounces a contract. So that's 250 million ounces of silver twice. So we're talking a ridiculous amount of silver changing hands here. If we go back to our SLV, we can see that 184 million shares were traded. That represents 184 million ounces of silver. So it's pretty obvious to anybody who knows the numbers of what silver there is out there, what's consumed by industry every year, what's mined. You're talking 750 to a billion is mined every year, roughly 500 or 600 is consumed by industry every year. Then it's a crapshoot as to what the rest is. Maybe 250 million is investment every year, and then whatever the rest is. So now you're talking just on the SLV, you're trading nearly an entire year's worth of investment silver that's pulled out of the ground in a day. Over here on the COMEX, you've got more, and this is just one contract. I don't think these are all added together. If you are aware of that, go ahead and let me know. I think this is just the volume. I think this is a July contract. So there's volume in other months here. So point being that this is just a bunch of people trading paper against each other, really, is all this is. So again, we're looking for entry points on the physical. Now this 30-minute is important because I did say that we want to check the signals to see if the sell signals are becoming more accurate than the buy, which indicates a rolling over market. You can see they are. We've got a sell, a sell. This is actually the rollover point right at this sell here, but a sell, a sell, a sell there, a sell there, and a sell there, and we're continuing down. Our buys are buy here and buy there, which means you would have lost money, and buy again here, you're losing more money, and buy again there, you're still losing. So definitely have rolled over to a bear, not a bear market, but a bearish trend. We do have a trend line here on the downside. Probably want to actually pull that back one to get a good look at that line. Still kind of rounding to the downside. So maybe this is our line. We're looking to come up through those lines to reestablish the bull trend. If we go farther back out, I've drawn a number of lines. Let's get far enough out here to see our... First of all, I wanted to point out that our MACD is now completely reset. You can see we are reset to way lower than anything you can imagine since over the last at least year and a half. So this is a huge reset on the MACD. Phenomenal. The volume is absolutely phenomenal. We don't have volume figures for this far back, not sure why, but the volume you can see is growing even as the silver is drying up. So we've got a 10% pullback that was blown right through. We hit our 20% pullback point around 40. Our next support is near the 30% pullback point. We've got more support down near 40% and 50% and then long term is all the way down here at 60%. A 60% pullback actually comes back to our Bear Stearns top back in March of 2008. Now, if we did get a 60% pullback, that would be the equivalent to this move that we had here from about 21 down to 8 and 9. So, if you remember, this was actually accompanied by the financial collapse. So, I would expect if we get something like this, all the way down like that, that will probably be accompanied by a financial collapse as well. So they're definitely pulling out all the stops. Zero Hedge has another article on the continuing margin hikes. Remember, we said earlier that the CME had hiked margins for the fourth time in 8 days. We lied. In fact, what the CME did was to hike margins for the fourth effective May 5th and fifth times effective May 9th. That's right, dear reader. In one release, the CME has performed 2 concurrent margin hikes, which means today's action is the 5th margin hike in 8 days, a previously unheard of event. As of May 9th, the initial margin is $21,600 or 11% of contract value, while maintenance is $16,000. This is nothing short of sheer panic at the CME. At this point, we can only wonder if FDR-style precious metal confiscation executive order will come by way of the CME or the FBI. And for everyone asking, here's a chart of the hike. Oh, and another thing, today there was another drop in COMEX registered silver with 4,758 ounces of silver withdrawn from Brinks. So the physical silver is still shrinking. The margins are going up, and as I pointed out before, it's normal to see margins go up as the price rises. 11% you can see is quite high. If you go to this chart, you can see that we're approaching definitely unheard of territory for a futures contract. So there's definitely something more here than meets the eye as far as these margin hikes. And I had heard rumors that we'll wait and see when the numbers come out, but I had heard rumors that the open interest is not declining. So if the open interest is rising, that actually means that there are a lot of people that are buying this drop. And if they are, we could actually get our slingshot rally possibly somewhere in this area, maybe 35, 36, and maybe get a slingshot rally. So the fundamentals are still there. You want to scour your... I think I did want to point out that I was doing some scouring. I don't have any dried powder right now, but just researching for those of you that do. I did see a really great deal here on Tulving. Tulving quotes everything in regards to spot. You have to buy at least 500 or 1,000 ounces because he likes to move volume, and you also have to pay in a certain way. But if you can pass all those requirements, then you can get some good deals. We got $39.93 as the quoted spot price on silver. And if you come down here, you've got your... There were mint boxes. Here they are. Here's the 2011 sealed mint boxes of Canadian Grizzlies. And Tulving is at $3.99 over spot. So spot's right at about 40. So for 44 bucks a piece, you can pick up boxes of these Grizzlies, and these Grizzlies are going for anywhere from 55 to 60 on eBay right now. So fantastic deal for those of you who can purchase 500 coins. Yes, we may keep going down, but I've found in the past that when I'm buying a falling market and I'm buying some of my favorite numismatics, I find that they run out before we find the bottom, or just as we find the bottom. So I would not be surprised at all. Point being is, yes, you can always get them cheaper, but I found I almost always end up buying the bottom, in that they just don't exist anymore. You can't get them anymore. So it's just one of those things. I'll keep an eye out on this Grizzly. I want to see where this bottoms and where they run out. I know that Gainesville's out now, and I'm pretty sure that APMEX is out. So just want to keep an eye on that coin, keep an eye on silver, and we just want to find an opportunity to keep stacking as much as we can. And we'll talk to you next time.